Welcome, dear traders. We are watching a recap of the Asian session. Stocks kicked off Wednesday with a small increase. Traders are revising their positions ahead of the crucial US data. They also have to take into account internal and external factors. High-ranking policymakers from all over the world are taking part in the annual meetings of the World Bank Group and the International Monetary Fund in Washington this week. Naturally, their comments are shaping sentiment in markets. For example, yesterday the IMF slashed its global GDP forecast for 2023 and 2024 again. The main downside factors are geopolitical conflicts, high interest rates, the risks of new financial shocks, and a drop of production to recession levels. At the same time, core inflation, which does not include energy and food prices, has not peaked in many countries yet. It will decline much slower than previously expected due to an unstable economic situation in the world. The US Treasury Secretary said that they remained vigilant to downside risks facing the global economy, but the overall outlook was reasonably bright. It wouldn't overdo the negativism about the global economy, Yellen said. She told the reporters the global economy was in a better place than projected last fall. Yellen hopes to visit China to establish economic relations with Beijing, and the speeches of Fed policymakers confused the traders even more. New York Fed President John Williams backed another rate hike in May. In his opinion, inflation pressure remains almost the same and continues to affect household spending. Minneapolis Fed President Neil Kashkari also spoke in favor of another rate hike to curb inflation. Chicago Fed President Austin Colesby has a different point of view. He prefers a cautious approach. He cited the recent banking crisis and the latest IMF report as arguments for his dovish position. Philadelphia Fed President Patrick Harker was also less hawkish. Although the global economy is slowing down, stock markets maintain bullish sentiment. Many investors expect inflation to decline further. They have also factored in another rate hike. According to the FedWatch Tool, almost 69% of speculators are betting on such a scenario. It's interesting to find out how this figure will change after the release of the US data. As investors are cautioned amid mixed statements made by the Fed officials and the negative IMF forecasts, the US dollar index was rather volatile. It tumbled to 102 versus its main rivals. The US dollar increased its losses yesterday. However, it's still trying to stay in the range of 102 and 102.20. Its trajectory will be mainly determined by inflation data and the meeting minutes for March. US government bonds, which usually boost the greenback, are also unable to climb today. The yield of the 10-year Treasury note is hovering at 3.43%. The yen, which usually rises on the fall of the US dollar, started the day with a moderate growth. While most currency pairs are stuck in the narrow range, the yen jumped to a new monthly high above 134. It dropped following the statement of the Bank of Japan governor and the fresh economic macro stats. The producer price index in Japan decreased to 7.2% compared to the previous level of 8%. It means that demand for goods and services is falling, affecting prices at the final stage of production. Besides, the Bank of Japan made it clear it would not change its monetary policy stance. The new governor has already warned about it during his acceptance speech. A slowdown in the producer price index occurred amid a drop in the energy price spikes. While inflation in Japan has not reached the target level of 2%, the yen is in a very vulnerable position compared to the US dollar. In the morning, the dollar-yen pair rose higher. However, at the end of the Asian session, the yen managed to consolidate at 133.80. Today, the yen remains above the uptrend in the range of 133.50 and 134, despite attempts to fall below this level last week. The IMF said in its Global Financial Stability Report that the Bank of Japan could help prevent abrupt policy changes later by allowing more flexibility in its bond yield curve control. These prospects are very positive for the yen. However, these are just predictions, and the dollar-yen pair is aiming at the resistance level of 135. The yen is moving away from the previous low of 130.30. The Australian dollar also lost momentum after the comments of the Reserve Bank of Australia Deputy Governor during her speech at an international conference in Melbourne. Michelle Bullock said that the regulator would have taken a pause in monetary tightening in any case. The central bank made a decision even despite the global banking crisis. Immediately after the release of this news, the Aussie fell significantly into the range of 0.6649 and 0.6679. However, it still retains a bullish bias thanks to high oil prices and optimism in the US stock market. As a reminder, the Aussie is rather sensitive to sentiment on Wall Street. Therefore, after a retreat from today's high of 0.6675, the Australian dollar rebounded to 0.6659. Last week, Reserve Bank of Australia Governor Philip Lowe warned markets that the decision to hold rates steady this month does not imply that interest rate increases are over. If the statements of the Reserve Bank of Australia policymakers gave the Aussie some support, the New Zealand dollar has no drivers for a rise. The Reserve Bank of New Zealand has already hiked the key rate in early April, and inflation is still very high, and the next meeting will be held only at the end of May. So the Kiwi dollar pair was trading in the red price corridor of 0.6182 and 0.6206 in the Asian session. It was very volatile due to a stronger US dollar. The pair fell to 0.6181. And that's all for now. Hit the subscribe button and stay up to date with the latest news with us. See you soon.